The journey probably started even as a kid, if we think about it, not really directly to do with trading, but at least my sort of background as in wanting to make money. And I never realised I was dyslexic at all until I actually went to university. And I've seen a lot of good traders and a lot of bad traders.
Yeah.
And I knew that I think you learn more from the bad traders. Look at what not to do.
Interesting.
It's not an easy job.
Yeah.
Yeah, it takes over your life. You've got to be very passionate about what you want to do to start with. We're all completely different. Our risk appetite's completely different. So it's good to understand, what it is. And again, being consistent. What is consistency? So you need to try and work that out for yourself as well. What it is you're trying to achieve. Just keep it easy. Yeah, you don't need to go. Start small. Like I said to you, it doesn't matter what it is. That's why Forex is very good. For years, people are going, algorithms come. We've got to get an algo. We've got to do this. So when an open on a particular market happens, what does that do on other markets? Everything else is uploads, and then the people that are in the US probably look and go, what are we doing up here? Yeah, and then it comes back down again.
Yeah.
Best traders I've seen have known when to push it and when not to. I'm always like, how do you know? Don't ever just listen to someone. We've got stories about that, which, everyone's fallen into that trap.
What's going on, traders? Welcome back to Risk Reward Radio. This is the show that dives inside the mind of high-performance individuals that are risking their money in order to make a living. Now, it's not often I'm going to get to say this on this show, but today's guest brings with them 25 years of experience in the financial markets. They have a background in investment banking, fintech, and they've been a professional independent futures trader for 15 years. They have had the good fortune of being surrounded by hundreds of professional traders, and it's safe to say they have a wealth of their own experiences to bring with them to the show today. I'm looking forward to diving into conversation, and I can assure you this is going to be one that every aspiring trader needs to hear to help them on their path to profitability. Without any further ado, it's my pleasure to introduce you to Lee. How are you, man?
Very good, Sanjay. Thank you very much.
My pleasure. Thank you for being here. Thank you for flying in, obviously. I know you've got a really busy schedule, but I appreciate you being here.
No problem. It's great to be here.
I like to kick these off very generic. I know there's probably going to be a lot of people that maybe don't know who you are or much about your background. And so I think it seems only right to start off with a little bit about your journey. Yep. So we know you've been a little bit of, you've experienced many different things in your time. You've obviously been a professional trader, which is not something that we get to hear a lot about in this day and age. We obviously talk to a lot of retail traders. Talk to us a little bit about your journey into trading and maybe how you got to where you are today.
It's a long journey. So we'll start from, so initially, yes, as you rightly said, I worked for investment banks, but before this, the journey probably started even as a kid, if we think about it, not really directly to do with trading, but at least my sort of background as in wanting to make money, I suppose. It's probably one of the things. It's quite entrepreneurial, wanted to get out and do things. That's a whole story in itself, but I had lots of businesses at a young age, done a lot of market trading and whatever else it is, which I think you learn a lot about supply and demand and things like this. One of the films that probably struck that I actually realised what trading even was Trading Places.
Okay.
Have you seen that?
Yeah.
Yeah. Great movie.
Yeah.
I'm sort of showing my age here now. And CFAX, to be fair, you used to look.
I haven't seen that one.
You'd go on CFAX, and you can, which is on the TV.
Okay.
Do you even know what it is? CFAX?
Yeah, no, I don't think so.
And you could see stocks and shares, like looking in the paper. And I'd look at these stocks and shares, and when I realised actually you can actually own a bit of a company, it actually got me quite intrigued. And because I was really into business and really, really sort of, wanting to make money, that sort of thing. So I used to write all these down and write them in a book and just look at the price movements. And I'm talking now when I am very, very young, sort of 12, 13 years of age. And then, so that kind of got me thinking about this sort of thing. And I was always quite interested in it, but I never sort of pursued that sort of way. And I left school early. At 15, I was dyslexic, so I didn't realise I could even do things like that. Do things like that. I just didn't think school was for me. Quite enjoyed it, whatever else it is. was quite good socially, but yeah, learning was pretty tough. And I never realised I was dyslexic at all until I actually went to university, and that then got me thinking about generally, and this probably will get into the sort of trading side, it got me understanding more about me and about who I am and my capabilities. Because before that, it was more sort of wheel and dealing sort of things, and as I say, I had some good businesses. I was doing well with what I was doing, but it was not in that sort of league that I wanted to go into. So when I had left university as an engineer, I went and worked for. Very, very lucky. I got myself into a graduate program for ABN AMRO, and they were absolutely brilliant. You couldn't, and basically that opened up the whole world of, wow, now I can actually see, I was always interested in the trading sort of side. I used to, look at things, but now I can see things from a different angle, and there's a lot to be learnt from there, which I'm sure we can go through if you're interested. But I kind of sat there, everyone started on the help desk, and we moved around, and I was on the trading floor for a year, and then I went into networks and security, and that was my area. And I really then stayed in that game for quite a few years. As I say, there's a whole period within that. Again, focusing back on trading, I was then started to look at markets. It's in spread betting.
Okay.
I looked at, name a few. There's a few of the big ones that are still around today. Again, I just thought something quite basic, as in, let me try and look at the price movements and what's going on, and we can go a bit more into depth on that. And I had something in my head was always like, if I can make 20 ticks a day, or whatever it is in the Forex world, but 20 ticks, then I can, a pound a point, doesn't really matter what it is, then I can always try and scale that up. So again, I was quite a logical sort of person. I like to look at systems and how things work. I looked at horse racing systems and things like that, which were quite good, but they were not scalable. You got sort of stopped by certain people to try and do things. So that was all when I was at ABN AMRO. I kind of got into that world, and there's some funny stories about that as well. Like, some people actually realised that I was into that sort of thing while I was still working there. I did a lot of exams while I was there, and everything else I did focus on what I was doing with the job. But trading was always something that was very, very in my heart as it was, and passionate about what I wanted to do. And then from there, I went contracting for a while and whatever else, which was cool, but it was something wasn't quite right. And I see a position come up in Gibraltar. It was for a spread betting company, which was a startup. It was run by some life traders initially, and this basically. Anyway, I went over there and took the job. Less money, whatever else it is, but it was in that world. And that opened up to, again, another whole new world, basically, of what was going on, which, again, we can go into more detail if you want.
Yep.
But to try and get the journey to actually when I become full-time, so that period there is probably 10-year period.
Okay.
Yeah, forgetting about the childhood, but that period there is like 10 years of playing around with things, putting things in spreadsheets. I used to use Yahoo for data, and wherever we could, sort of getting stuff, and start to understand a bit to do with economic figures and price movement, and it was all, I say, self-taught. I mean, YouTube was probably around then, but I don't think it was really the sort of thing that you would sort of go to do that sort of thing. I remember once I bought, so the only training courses it was that I've ever been on, me and a friend bought a book. He was a market maker for Norwich Yukon across the road at where I used to work. And we bought a book for £300. I looked at this, it wasn't a book, it was a folder. And it basically shows you some basic things in the market, and it gives you the typical moving average cross strategy
for £300.
For 300 quid. Yeah, but so just to go back to where I were there, so I'm there sitting in Gibraltar in a completely different environment again, surrounded by lots of different types of traders, I moved more into the risk side of things, into broking, understanding it from that respect, connected systems up for trading systems. So I'm very experienced at different trading systems. And then so I went full time. Basically, they were looking to raise some money, and they did raise money, but it was from a company in London. And I decided to take a I was going to say a punt then, but take a new area and go, well, do you know what? Let me take my redundancy and try full-time trading. So I'd been around it for a long time. I took not a great deal of cash. If you want, more than welcome to explain what that was. And literally sat down. We got an office where we were. I was with another trader as well, which we can go into. And my journey started from there, and it was quite a long journey with lots and lots of different parts. I hit the road when I become full time. I mean, I had a lot of outgoings, so it was quite a different sort of story. But I was lucky enough to do pretty well. It was in 2008. Things were going. It was the end of 2007, 2008 that I went full time.
What a time to start!
What a time to start! It was pretty crazy, where you could make a lot of money or lose a lot of money very quickly, but I like them sort of markets.
Yeah, interesting.
So I'm gonna leave that there. Yeah, you see what?
No, I really like that. Obviously, you've had such a span of different experiences over the space of your career. What was it like going from trading with a firm to trading for yourself? Did you find that a big difference mentally? Because in my head, and again, please correct me if I'm wrong, when you're trading with a firm, are you getting a salary from them as well as getting a bonus from any of the profits you make from trading?
I've never traded for a firm.
Oh, okay. Okay.
So maybe. So when did you think I was trading from a firm? Just so we can try.
Is this when you went to Gibraltar and you worked for the?
Yeah. So when I was in Gibraltar, I was an employee in Gibraltar for the startup and had a share in the company.
Gotcha.
And I basically I set the systems up, being a sort of, I don't know, whatever you call it, an engineer at the time, and then basically they didn't really have a lot there. And then moved into the broking side of things and risk side of things.
Gotcha.
Never traded with.
So your only
money.
experience has only ever been trading with your own capital?
Yes.
Interesting. So, okay. So from that perspective, do you think things would have been easier had you traded with a firm or a bank or somebody else's capital? Did you prefer trading with your own?
Well, I've never tried it. I've got some experiences as I went through my trading career, which we can go into. Do I think it would be? I'd have liked to experience it, I suppose, because now I understand trading and whatever else. But I don't like to. I don't like to. I suppose. I'm trying to think of the right word. It's not really report, but. Listen, working for a big company is completely different. Yeah, it's a completely different way of trading. And the risk side of things is completely different, and obviously being looked at completely different and all that sort of thing. So working for a bank, I can see that in the bank, there's a lot of different types of people in there. So you've got people that just do analysis and look at things that don't actually ever trade. There's people in there, market makers, they don't really trade. Yeah, they're just creating, keeping markets going. You've got sales traders, they don't really trade. Yeah, what they doing, they're picking up the risk stuff, ringing up people and saying, I think maybe Apple's a good buy. So they're not really trading. You've got a selection in there that really, really trade. Mainly in where we were at the time were the derivatives traders. They would have a certain amount of money and a certain amount of way that they could do it. But that's within a bank. Obviously, it's different in certain places like floor trading and things like that. But would I like to experience it? No, in fact. No, I'm actually going to say no. What I would like to experience, so I know lots of floor traders. So being backed by someone on the floor is a completely different thing, because then you're more... So most of the floor traders, the way that they worked was... So it's quite interesting, because obviously with these new prop firms and things like that, which I'm sure we can go into, basically, me and you get on, and I say to you, okay, yeah, cool. You're whatever. You've just got a general job, and I'll then move you in and say, I'll back you. Yeah, I'll give you X amount of money. You start trading. The quicker you can learn and get your own money. You pay me back, and that's it. You're off on your own trading. So that type of thing is, it, for me, seems like a much better rate. You know, you're in, I suppose, you know, your own destination. You can do it. If you're working for a firm, you're very, very strict in what you do.
Yeah.
And I think over the years, I haven't worked for anyone for 20 years. So
yeah, I think this is a very common theme for a lot of retail traders, because a lot of people come to the space because they're looking for that level of freedom. They don't want the boss, they don't want the clients, they want to be able to work from wherever they want, when they want.
Yeah.
And ultimately, at least from my experience, I actually think for some people that freedom also works against them. Not having that structure, not having that routine, not having the discipline to do the things that you're supposed to do can also be something that works against you. One thing that I do want to dive into that I think you touched on, which I found quite interesting, is you mentioned obviously when you went full-time with trading, you had a lot of pressure financially. You had a lot of outgoings at the time. This is something that I see, especially in the retail space very often. A lot of people are coming into the markets hoping to make a lot of money, starting from something very small, and they're doing it from a place where they don't necessarily have substantial finances of their own to be able to support themselves. And I know this from my journey. When I stepped out of the corporate world, I had only been working about 4 years at that point, and I had been trading for a long time. I'd had some progress. I left work pretty unexpectedly, and I thought, you know what, fuck it. I'm going to try and become a full-time trader.
Yep.
And the problem was going from having quite a stable income, a safe income, having that safety net, to having nothing and then relying only on the markets to pay me screwed me up financially. I could not make process-orientated decisions. I now needed every trade to win because I was hoping that's what's going to pay me at the end of the month. What was that journey like for you? How did you deal with that mentally? And is there any advice that you could give people going through that stage? Because you've obviously been there and done it.
Yeah. First of all, I think probably lots of ways that I've traded and some of the ways that we can probably discuss are probably not the standard ways that most people would say. It's probably not very textbook. So, you know, don't... let's not look at it there. So yes, I agree with you totally. I wouldn't tell anyone to go and say, give up your job, go into trading without having some sort of, you know, backing money or whatever else it is. I pretty much, it was good the way you just said that. Like, as in, yeah, that's pretty much the way I said it. I thought, well, let's give it a go. Yeah, I've got a certain amount of money. If not, I'll go back and get a job. Yeah. But because I feel, because I had that period beforehand, it wasn't like I was a novice. Yeah, and I've seen a lot of good traders and a lot of bad traders. Yeah. And I knew that I think you learn more from the bad traders. Look at what not to do.
Interesting.
Yeah, and that's pretty much. So when I started full time, even though yes, you know, I'd sort of give up my job and whatever else, it was that sort of mental attitude that you said. I said, well, look, let's give it a go. If it doesn't work, I'll go and get a job. Yeah, but I might as well give it a go. And I'd had that experience. So when I sat down, I can't even think when I sat down for day one as it was, because, you know, it's all a bit of, you know, I was already in that zone as it was. And I felt that, you know, I've just had that belief that I could make money. And I've always had that belief that I can make money. I've got no markets are always moving. If they're moving, for me, if they're going up and down and they've got movement, then there's always opportunities. Yeah, so it's just trying to get that discipline and whatever else it is to try to, you know, not feel I have to make, you know, all the money straight away. Sometimes you're very lucky, you make very good money. I think that's another interesting thing that we could discuss, which is quite difficult doing these prop firms, I know, how you can risk things. But I always had that belief that, you know, I'll give it a go, and if it doesn't work, okay, I had something to fall back on. I think it's quite important as well is also because where I am at the moment, I talk to lots of people that want to get into trading, and and obviously they look at it in different ways, and sometimes they do feel, I'm just going to go in and can make a lot of money or whatever else it is like that, and it's not sometimes the best way to look at it. So I generally try and put them off. I've had it with lots of my say my daughter's friends and that. They say, I want to learn to trade and whatever else, and I say, are you really, really sure? Because it's not something like, it's not an easy job. Yeah, it takes over your life. You've got to be very passionate about what you want to do to start with. It's not like you're going to go in and sort of make a lot of money very quick, and it's not. You have to look at it like a business. And if you look at it like a business, and then slowly you will start to build that business, and then you can start to scale that business just like anything else. And having that support around you, I think, is very, very important. I was very lucky there where, as you said, I had other traders around me, so I could see good traders, bad traders, a great family around me, a great wife and kids and everything else that all just allowed me to go, okay. So there's no pressure from that sort of respect. And I think that helps. Yeah. So yes, for someone that's starting out, great to have a nice, obviously a reasonable amount of runway before you can actually earn is very important. But also as well, having some support around you, some encouragement and belief in yourself. Start with inside yourself first. Understand, what it is that you're trying to do, and not just try and, I don't know what these things, but just don't think it's going to happen overnight.
Yeah. This is a big issue in the industry, I think, because I think a lot of people that come into the markets now, in this day and age, they come from social media. And they've seen images and videos, and I think the general message that is portrayed is a very false reality of what real trading is like. A lot of it is glamorized. You've got all these people that are not necessarily making the amount of money that they claim, or making any money at all from the markets, and they're portraying a certain lifestyle of what trading is. And in my experience, at least, the people that I've met that are really about it, they tell a very different story of what real trading is like. And so it's obviously insightful for me to hear it from someone that's been in the industry for some time, that it's not an easy game. It's difficult, right? And it's going to take time for a lot of people. One thing I'd love to dive into a little bit more, you mentioned obviously you had the good fortune of being surrounded by some very good traders and some very bad traders, and you learned something from both experiences. But you mentioned specifically you learned more from the people that didn't do so well. Were there certain things that you picked up during that time that you thought, if I don't do that, it would help me to become successful?
Particular things, I can remember a couple of things here, which is nothing, but things like this. So someone opens an account up, and with futures trading and whatever else, they're generally like, I've put X amount of money in, and we can give them limits, and you got margin that's set by the exchange, but then you can get intraday. So usually you can get more limits than what you're expecting, and they'll always try and push you. They put something in and they go, I want, I'll say, I'll give you 10 lots. Oh, I want 20 lots. And you go, yeah, but, and as you get to know the trader more, you can push them and you can give them more leverage, more to trade with. But the point is that you get there is, so when someone opens the account and they get their, however their amount is, sometimes you look and you literally put the phone down and you look round and they're in a trade. They're in like the maximum size, and I think, blimey, he's keen, and they're in, and you can see it as well. So when you get to see what the traders are doing, like sometimes it's almost like mentally you can see, like they're buying, and all of a sudden, okay, and then you think, okay, cool. You can actually see if they're, certain stops of things are put in, whether they use them or not, or whatever else it is, and then it's like, now they're short. Right? And you just got, it doesn't seem to have any real system to what they're doing. But the good traders, you can kind of, without understanding what they're doing, you don't understand what their strategy is or anything like that, but it looks systematically correct.
Right.
Yeah. And it doesn't look too erratic. Yeah, and I think that's probably a good word for it. So that's definitely something there for the bad traders. Definitely are more erratic. You can kind of get the sense from them on the phone as well. Sometimes what they're like. Listen, I've seen some of the best traders that you can never. There could be all sorts. There's no one particular thing that you go. They're really good traders, but that type of feeling is something that wasn't for me. Yeah, okay. I'm quite systematic, so I like to be okay. If I'm going to go in something, I'm going to go into it. And if I've got that belief in what it is, doesn't mean I might, change or whatever else it is. You've got to have that ability to be able to say, I'm wrong, or something's not right here. But at least there's a reason to be doing something.
Gotcha.
So that's probably one thing there.
Yeah, I like that. You mentioned specifically, and obviously I know from a little bit about your history, you traded primarily futures markets. Is that right?
Yes.
Any particular reason for just futures? And I ask primarily because I know, especially in the retail space, especially in the prop space, there's a lot of traders that will only trade the FX markets. They'll only trade indices, for example. Why specifically futures? Do you feel like it has any specific edge in that, or?
Well, I did trade. I learnt a lot from spread betting.
Okay.
Right. So probably the first thing that I probably traded in spread betting was the Dow Jones. I liked it. It's quite simple. 30 companies, nice and easy, good movement, whatever else, and I could see the price movement. And I like the tick sizes and all that sort of thing. So it's quite nice in that sort of respect. Like the S&P moves in quarters. So it's a bit different, things like that. But I went into futures more, probably because where I was. Okay, and my background as well is I've been around lots of floor traders that were all on the IPE initially, and the live floor traders. So it's all futures in that respect. I can trade options as well, so I understand from that side of things as well. And I used to look at, so probably one of the first strategies I started doing myself was the pre-opens on the FTSE.
Okay. Which
you can't see the pre-open on the FTSE unless you're looking at the futures.
Right.
Yeah. And that's all changed because of timings and things like that. So that's another thing we can go into to do with strategies. They work and then they don't work, and sometimes they come back. But this particular strategy, we could look at the pre-open, so before the market opens, you can see bids and offers going in the market, and you can get an idea on particularly where potentially it could open. Yeah, and then you can look at other things as well, say spread bettors, as it was, and get an idea on what they're doing. And sometimes that was quite an interesting thing where you could actually take the spread bettors on, which they didn't like at all. So Cantor Index actually sent me a nice big check at Christmas once and said, sorry, we can't, what did they say? We can't give you the service something about the service. And I rang them up and said, your service is great. And they just laughed. And but going back to futures, why futures? Definitely feel. I mean, I haven't traded Forex as it is or anything like that. I don't really even fully understand it. I know it moves. I do. I understand it. I'm not like stupid in that sort of respect. But futures for me, just really, really straightforward. I've got a certain amount of money in my account. Leverage, obviously, is, well, we can talk about that, where oil went negative, so you can never really tell where your actual leverage is. But I know how much money I've got in my account. I know what my limit size is. When I put a trade on, okay, then if it goes up, I make X. With futures as well, I can see, first of all, you've got an exchange, and you can see transparently what happens. I put an order in, I take the order out, you're trading on the other side, we can both see that. Doesn't really matter. I can see all the order flow. Everything is just very much transparent and much more easier to understand. For me, the Forex game's quite, obviously you've got good companies and bad companies. It's very, very bit of a shark's world where it is. I don't really understand the market data. I don't really even understand why people look at volume, because obviously that volume, unless you're going to prime brokers and trying to look at things, it's not really volume. So if I got into the Forex world, I'd be setting up more as a market maker, understanding what's going on from prime brokers, and probably then trying to work out strategies from that. Futures is just quite straightforward, very transparent and very fair.
Fair enough.
But again, you need to be very aware as well, because obviously you do get things that happen in futures markets that obviously don't happen, and you can get blown up. E.g. when they go limit up and limit down for certain reasons, and things go on and things like that, and again leverage or whatever else. And obviously risk side of things, if you go negative, you do have to pay the money.
Yeah, dangerous game. I want to talk a little bit about the strategy side of things, because obviously coming from the retail space, I always say I have the very good fortune of being able to talk to hundreds, possibly thousands of aspiring traders on a monthly, quarterly, yearly basis. And I think for me, when I look at the retail trading space, I see traders, they typically struggle for one of two reasons, right? If they're struggling to make money over an extended period of time, there's only really one of two reasons behind it. The first one is they don't actually have any edge in the market, right? Yeah. They don't have a system, a plan, a strategy in place that's actually going to allow them to make money. And the second side of it is they aren't able to stay consistent with their strategy. So they know what they should be doing, but like you said, they're erratic, they're impulsive, they get swayed by their emotions, and they're not necessarily consistent with their approach. So I want to start off, I want to hear a lot more about your specific strategy or some of the strategies that you traded. But I want to start off with a general question, which is, from your perspective, from someone that's been a professional, that's done this for many, many years, why do you think so many retail traders are struggling to make money from the markets?
Why? Without going into maybe what, I mean, trading itself is all it. I feel it's about, a lot of it's about personality, and it's you as a person. You got to set yourself initially what you want to get from it. So we're all completely different. Our risk appetite's completely different. So it's good to understand, what it is. And again, being consistent. What is consistency? Does that mean I make money every year, every day, whatever it is? So you need to try and work that out for yourself as well. What it is you're trying to achieve, I would say. Again, with the retail space, I suppose there's a lot of, I was going to say data, but there's a lot of different people telling you different things out there, and it's quite overwhelming, to be quite frank with you. So trying to funnel that down is quite important. And then let's just go back to what you're talking about with strategy side of things. I think you got to start. I mean, I like to understand my market. So once you do understand, okay, I'm interested in a particular market for whatever reason. That's a different subject. Okay, well, understand it. What makes it move? Why does it move? What's the general economic side of things, the sentiment that goes into that market? Is there times of the day that it moves certain times, certain periods more than others? I break my day down always into sessions.
Okay.
Yeah. So as I said to you, I started to say there pre-opens, and then we trade the open, and then stop. Yeah. And then I'd go, okay, right, next. Yeah. If I've got something else, then I might look at the next part. Biggest thing I used to trade was closes. Closes are the best times. I mean, that's generally the times when markets are moving. There's more liquidity in the market. They're moving faster. There's everything going on. It's when generally if banks and hedge funds or whatever else, they want to get off a lot of size, they'll be doing a lot more at that particular time. So going back to strategy again, I would break down your day into different time periods. Trying to look at everything in one hit is quite a lot to understand. And then really, it's understanding your data. As I say, maybe it's me, but it's my logical head, is really just sort of understanding. The only way you're going to do that is to, well, how do you do it? You either look at charts, write it down, put it in spreadsheets. I've had a journey there where I've filled spreadsheets up. They got too much, so I started hiring developers. I've had many developers. I've had an office in Ukraine with many developers doing stuff. Developers here, which I'm on a journey doing all this at the moment, and understanding what it is before you start to go and jump and start trading. So think of that period that I said there. I had a long period, and I was working. I had a family. I've got everything else. So I've got depending on how much time you've got and whatever else. But just get to understand your market, look at it, and then just keep it keep it easy. Yeah, you don't need to go, start small. Like I said to you, it doesn't matter what it is. That's why Forex is very good. That's why some of these products, you can start very, very small, and then you can always scale it up.
Yeah.
So, I don't know if that answered your question, but
no, I think it definitely starts to touch on the topic, because there's a big part of what you said, and I just want to clarify first. Would you say that you're more of an intraday trader? How long do you typically hold positions for when you're in and out the market?
Yeah, so I break it down. Definitely intraday trader.
Okay.
But I do also, I've put things on for long periods of time, as in, when I say long periods of time, 2 or 3 weeks.
Okay.
Maybe.
Yeah.
But we also trade things like spreads, calendar spreads on futures. And flies.
Okay.
You can go into condors, which it start to get even more thing. And these move very, very slow. Well, they move very, very slow until they blow out one day and something happens or whatever else goes on. And then there's been times on that. But in general, so that those types of things you can put on and you can kind of leave them. So the ways to trade, break it down in sessions. Definitely look at the, we should look at the FTSE Open a lot. Well, we should look at the DAX Open first, which gives you an indication on where maybe the FTSE is going to open. But I'd look at the US, of where the US is closed, and get an understanding, and work around the clock and what Asia's happened, and get your bearings of what's going on in the market. So and when I say bearings, sometimes you just look and you go, okay, it's all pretty normal. But sometimes you look and go, oh, something's a little bit not normal. And then obviously, that alerts you to something to either be careful, or maybe there's good opportunities. And then break it down. So, and then what we used to do, so you said about being intraday. So break down a session. The closes were great times. So you trade a lot of oil on the closes.
So are the closes, do you find they're still as profitable or impactful in this day and age as well?
Yeah.
Yeah?
Yeah.
Okay.
Yeah, there's still a lot of opportunities on oil. So we used to... Again, we would trade closes, and we'd use things that are like settlement prices and things like that, which give you things that you can do on that. So without going too technical on it, more than happy to if you want to. But yeah, there's a lot of opportunities on closes. But again, it depends on your personality. Again, sometimes you might go 11 o'clock in the day. There's something particularly that may be going on. Some people are very good at figures. I mean, I wouldn't sit there trying to trade a figure when a figure comes out particularly, but you can look at price movement that happens once the figures come out and look at the reaction afterwards. Or that reaction might happen after that figure's come out. What happens for that week? Or whatever it is. I mean, there's so many different ways to try and sort of cut up a market and look at it, that, and understand it. But so, yeah.
Do you feel it's become harder to be an intraday trader in the last 10, 20 years or so? Because, and again, I think that's something that's a common consensus online with the introduction of like algorithms, high frequency trading and things like this. Do you feel like finding an edge intraday is harder, or do you think...
Yeah, well, my thought on that, sorry to interrupt you there, but it's more to do with... And it's interesting to talk about algorithms and all this of it, and for years people are going, algorithms come, we've got to get an algo, we've got to do this, and they're great, algos are great, and if you put orders in the futures market late at night, you can see I put an order in, and there's orders coming, behind me or in front of me, and you can take it out, and they're just playing around with markets, but they've got their particular job they're doing.
Right.
It's like everyone, a bank goes in, they've got a particular job they're doing. Algo's got a particular job. If you talk about oil, you've got people that really, that's why I like futures as well. You've got physical people that need to swap physical oil to futures or vice versa. So there's things that are all happening. So these algos, great. Don't try and take an algo on. It's no good. They're going in the markets really quick and doing things. But if you understand what I'm saying, don't even understand what they're doing, but if you understand everyone's got a different idea for that market, and if you don't want to try and go in and be a scalper, for instance, I mean, I don't know what you call scalping nowadays. I hear this in different ways. Scalping, I used to know, literally, they're going in and they're literally making one tick. So like market maker, just in, out, all day long. They're doing 40,000 lots in a very they're getting rebates from things they're doing. You know, these type of people it's very, very difficult.
Yeah.
Yeah. But intraday trading, I mean, you've got all day. I mean, blimey. If you can't find something all day to try and make, depending what it is again, you know, what do you want to make? I could make 5 ticks and then I could scale it up and make good money. Yeah, I could make 20, 30, 50 ticks, right, on the smaller side and still make good money. So, you know, we've all got different way, you know, you've got all day to make, you know, there's plenty there. Don't mean you have to be trading all the time. Don't sit there clicking the button all day. Yeah, it's just trying to find your particular, I know it's always a cliche, you know, find your edge and whatever else it is, but, you know, just find something there that can make you some sort of money within that period with all these other things that are going on.
Yeah.
And just keep it easy, and, you know.
Yeah, makes sense. Makes sense. I like this idea because, and I think you've touched on this specifically, there's a common sort of saying that's thrown about, which is, just because you're a day trader, it doesn't mean you have to trade every day. And I think that's kind of what you summarize there as well, right?
Yeah.
Just because you're at the charts and you're kind of understanding what's going on in the markets, it doesn't mean that you actually have to have a position on.
Yeah.
Which I like the idea of, because like you said, some of the, you know, worst traders that you've seen are ones that are erratic, just getting in and out of the market, and I guess just chasing price around. Tends to only end up in one sort of way. So to kind of summarize what you've mentioned so far about, I guess, finding your edge or your strategy in the market, it starts with obviously really understanding the market that you're trading, the reasons potentially why it's moving, and then focusing on sessions, right? Opens, closes, and then trying to find some kind of edge around that. Is that fair? Is that a fair assessment?
Yeah, I think that's pretty fair. I mean, sessions is definitely a big thing. Opens and closes are great. I'm just thinking there what we've just said there. I mean, why it's good as well, because I do very time-based sort of things, obviously, when I was just talking about sessions there. But sometimes, again, this is not very textbook way of doing things. But stops and things like that. I mean, and people, you know, and again, I've got to be careful here, you know what I mean? I'm not saying go and trade without stops, but sometimes you can find patterns that happen in markets and your stop could almost be time. Yeah, as long as, you know, whatever it is. And as long as you've still got, you know, again, like I said to you, you might put a position on and then go, you know, you're looking around and, you know, I was a bit overkill with screens. I had multiple screens because I like to just look at things. And I look at something and think, something that's happened there that's not normal or whatever else, and you make it out. But in general, if you just put that on, it used to drive me mad. You put something on and whatever else it is, you know, it's a typical thing. Oh, I put my stop just under, you know, the recent support there and whatever else, and they just, you know, you just get stopped out and then it goes up, and then before you know it, you're trying to buy it again, and you're just doing, you're just driving yourself mad. So give yourself a bit of room. Yeah, if you use a stop, then give yourself some room. Yeah, so that, you know, you can do. Bring your size down. Don't, you know, you shouldn't. Sometimes I've put positions on, and they're tiny. Yeah, but do you know what? I could literally put it on, and I could go away for a couple of weeks if I wanted to. Do you know what I mean? And I've done this before on some spread betting, because when markets were going mad back where they were, I just think, they've just come off way too much. You know, like. And I just think, do you know what? And I was trading futures then, but I go, do you know what? I'll go and buy £5 on the spread better and just leave it. Yeah, and that's it. Because, you know, you've got loads of room and you're not really worried. So definitely the sessions are important. Also, why it's important as well, it gives you time to pull away. So again, I would pull away, and like I said to you, I started working with lots with developers and things like that. So that gave me time to not sit there watching the markets all day, sitting at the screen and thinking, you know, if the more you're sitting there watching the screen, the more you feel that I think this is going to go up there, and you end up pressing the button, and then you end up getting stuck in a spiral. So I'd pull myself away and do something else, or whatever you're, you know, whatever it is, whether you go to the gym or go and see your family or just whatever. Sometimes we'd go down the shops and buy some more screens and things, or whatever it is. Do you know what I mean? We would just get out and go, you know, go and have some breakfast. If I'd had a really bad time, we used to have a balcony. I'd sometimes lay on the sofa and just like think, just chill out. But at least you've got periods that you can take that time to think it, or you spend time to analyze the market. Yeah, pull yourself away, sit there, look at your spreadsheets or whatever, however you do these things.
Yeah.
And
I can resonate this with that idea a lot, because again, going back to the period where I quit my job and I tried to do the full-time trading, I found, again, number one, the financial pressure of not having a stable source of income, but secondly, also the time to just spend sitting at your charts all day if you wanted to. You can almost create opportunities that don't really exist. And so for me, starting my coaching business, it gave me something to do. It gave me something else to work
100%.
on. It's another project. And I become an infinitely better trader. And again, this is not me saying I'm the best trader in the world. I've still got many levels to improve.
100%.
But
all of us.
I'm a much better trader when I have money coming in outside of trading, and when I have other things to do. And this is a big part, again, of what I think a lot of retail traders lack. They think they have to be on the charts all day. They think they have to be trading every moment of the day. And it's a very easy trap to fall into. Couple things I wanted to touch on there from what you said. You've talked about how when you're watching the markets, and this is obviously to do with your edge and your strategy a little bit, you can see things are not quite normal. Is that, I don't know if that's the way you phrased it. That can only come with a level of experience, right? Like somebody that is new to trading, that doesn't really know the markets that well, they don't know what they don't know.
Yeah.
So I would say, and again, this is my interpretation of what you said here, experience is everything in this game. You need to have a certain level of skin in the game, experience, seen things to be able to understand that this is an overreaction, this is an underreaction, something's not right here. Would you agree with that?
Yeah, 100%. And I think the experience is obviously very important. How do you get that experience? Is certainly, well, it's time. And how can you get it quicker? I would assume would be which I did. I used to sit there, say, looking at spreadsheets with data, and just typical things. How do you know? I'd look at ranges and you get an idea of particular things that's gone on. So that's the price action side of things. And then you can look at reaction on figures, for instance, is another thing of generally what happens when these figures come out. And also as well, understanding things like as well, just the, again, I know it all kind of lies back to the same thing, but the opens and the closes and the other periods that go on within the market, these break down into certain aspects which correlation work moves there. So when an open on a particular market happens, what does that do on other markets? So once you get a feel for that sort of what goes on, then again with spreads you can look at. So I don't know if you know much about calendar spreads. So on futures you've got on the oil you've got every single month there's an expiry,
right? And
you can buy. As an instance, you can buy a spread or sell a spread, obviously, and you have calendar spreads which are on the exchange, so you can do. So let's say you can buy it. They have a matrix, so you can buy the front month as it is, and you can buy the second month. So that's just buying the normal spread, or you can buy the front month and the back month. And there's a whole thing. Now, if you've got, when we're talking about there, you'll see the front month is getting stronger and the back month's getting weaker. You get an understanding that maybe there's something going on, and if that moves, depending on what you're used to with your ranges and understanding, if that moves, say, 3 or 4 ticks very, very quickly, then it looks like there's a lot of buying going on within that front month. And that could be because the front month is getting stronger for a particular reason. And then if you look at the next thing to see, okay, well now what correlates to that, is that having that same effect? And if it's not, then there might be an opportunity. Yeah. Or and you just keep looking around. Again, we used to have squawk services. Okay. So squawk services used to be obviously they speak out, they look at all the different news feeds and everything else. But you get an idea and reaction that when something happens, what generally goes on. And I've had many experiences for different times where sometimes you look and something happens and you think it's not really got into the market, or it's done too much. It doesn't seem to, it's done a bit too much in that market, and then you give it a while, and you never try and take the market on. Never. Yeah. So you then watch and you think it's done a bit too much, and slowly, you might think, and then you go, okay, maybe there's a little bit of an opportunity because it starts to filter out and other players start to think about it. So that's how you'll get an understanding. Again, if we look at the opens, they open really, really strong, and then by the time it gets to where the US come in, everything else is uploads, and then the people that are in the US probably look and go, what are we doing up here? Yeah, and then it comes back down again.
Yeah.
Comes back down again, and then it goes back up again because they're going, well, they all just think about time periods. These people are coming in, they're sitting at their desks at these particular times, and they're going, blimey, it's way up here or way down there from where it was. And then big players can help sort of generally move the market. And it's all sentiment as well, how people feel and whatever else. So I think that's really, really important to sort of get that whole overall feel of your particular market. So really concentrate on your market itself. Right now, that could be, I only trade, let's say for one particular pair, or you've traded, X pairs or whatever it is. But then everything around that, just get a good feel for that. And then that's what I would suggest,
Yeah, it makes a lot of sense. And again, from what you've said, the experience element of being able to understand and get that feel for the market comes from, yes, a little bit of time, but also comes from having the right amount of data to support what you're saying. So I want to dive into the data side a little bit, because I want to know from your experience, if you can quantify this, how much data is enough data to tell you that you have an edge in something that you're doing?
Don't know. It's an interesting question. So if we're talking about data as in a period of time of market data, then, well, we can, again, we can. I've never been one to go. If you look at hedge funds we talk about, or general back testing people that look at strategies, they will get an idea and they look at it technically, then they run it over whether it's 2 years of data, 10 years, 20 years of data, and in that period you've got all sorts of things that have gone on. Yeah, that's fine, that's cool. But I mean, the way that I would particularly then look at it, I'd look at what has happened. Again, it's very difficult to tell depending on what your type of strategy is, but how it's performed over a smaller period of time. You've got to break down these periods and understand it. And you've got to see where it's happened as well. It's quite important to understand that when you've got these strategies, and particularly if again, we're going into a back test. Let's say you have got loads of data. You've got 20 years worth of data, and you back test it, and it gives you. But then you don't know whether it's happened in the period of day that you particularly want to trade. It might happen more times, silly time at night or whatever else it is. So the amount of data, I don't think is that important. I think it's very, very good to have a big data set.
Yeah.
I think it's how you look at that data. It's just logical sense, really. If my strategy, say for instance, when we would either trading those particular closes and sessions and whatever else, I'd look at patterns that have gone on, and those patterns could happen for it would be nice if they happen for a long period of time, as in a long period of time might be for, I'm trying to think now, 2 to 4 weeks maybe.
Okay. Yep.
Yeah. And then things start to drop out and whatever else. This is about consistency as well, which is quite interesting. But if I got an idea and I thought to myself, okay, over a week's period, and again on these particular things I'm looking at, over a week's period, if it works 3 times out of 5, okay, then I can make some money. If it makes 4 times out of 5, I can make a lot of money. Yeah, so I've got to know there. When it starts to drop down and it starts to get, more in the 2s or whatever else, then I'll start to decrease everything right back. So you can only do that on a small data set.
Yeah.
But I would understand on a big data set, because naturally I've been doing it, of what that it does work and when it does work and don't work. So I think the answer to your question is I think it depends on how your strategy is, what you're doing, and how much data you really need.
So you'll have some strategies that are based on sort of time-tested principles over large sample sizes of data, and then you'll have some which are smaller sample sizes of data, which are maybe short-term patterns which you're observing. Is that right?
Yeah, I suppose naturally, I know over a great strategy is, right, over many, many years, there's edge of something.
Yeah.
But then within that period, there's periods that are better than not.
Mm.
And you've got to ask your question why that is. Yeah. So why is that period good and that period is not? These start to get really quite hard questions to answer. And this goes back to what I was talking about there. So why is it good? Okay, why is it good? Maybe because there's other factors that I've seen that help that, or why it's bad could be something else, and that could be many, many different things. So looking at a smaller time frame as well, then gives you an idea of when to try and press and when not to. The best traders I've seen have known when to push it and when not to, and then they can make a lot of money.
Yeah.
Very quickly, and they know when to
take their foot off the gas.
Scale back.
Yeah, I like that. So based on everything that we've discussed so far, we've talked a lot about obviously finding your strategy, your edge in the market. What would you say were either your biggest challenges, or what is your perception of maybe the retail trading space? What do you think their biggest challenge is when trying to find their strategy or their edge in the market?
I'd say one of the biggest challenges I had, which is probably not directly answering your question, maybe it come, is to do, which is related to where we're going in this problem, is actually your money being safe. Okay. Which is, and the reason why I say that is because so I've been with a few clearers, not loads of them. I say when I talk about that, I've had lots of accounts with spread bettors and other people and things like that. But the main clearers was, and MF Global went under with us in end of 2011, I think it was. And it's just when I decided to take my 3 kids then out of school, and we went travelling, and I made this big this box. Actually, it was like a DJ box, and I thought, we'll go around travelling for a year. Took them out, and I can trade as I'm going around and all the rest of it. And they went under. And the thing was, that actually made me think about the whole side of that. I believe before, we used to use that as a bank. Basically, I used to pay school fees out of it. I used to pay everything out from there. And we just completely used it as a bank. And it happened like that. On the Friday, we got a bit of a warning. And then the Monday, it was basically gone, liquidated. No one could take anything out and whatever else. And everything had frozen. That was a nightmare. It wasn't very good, you know what I mean? And so if you think about that, that's what made me think more about actually safety. So let's go back to what you're talking about with retail traders. I would be, again, with the Forex side of things and whatever else it is trying, you build your account up and whatever else you're doing. You don't want to build it up. You've worked very, very hard for it, and then something happens like that. So be very aware of where your money is. Within certain places, you've got you're guaranteed for a certain amount of money, so that's fine. But make sure it's checked.
Yeah.
Let's just try and answer, I suppose, probably more your question that you was talking about. So you were saying what did you ask again?
What were some of the biggest challenges that you've encountered when maybe developing or executing your strategy?
So now I'm going to go down to really is when you get further down the road is probably more to do with, I used to have spreadsheets, and I've worked with other people that have been in my office, and I used to always get them to use spreadsheets. We've got loads of stories about that. And I used to be spreadsheet mad, but these get too busy, too filled up. And in fact, even myself, I'd sit there at night, and then if you go back to it the next day, you're like, wow, what did I do that night? You don't even know what you've done. So the challenge then was, how do I now? I've got all these ideas. You get told by lots and lots of people, signal providers, this, that, training courses, whatever else it is, of what to do. And I'm very intrigued. I think it's good to be curious as a trader. That's what makes you go, I wonder that. But, you don't just jump ahead. So I think then having this data, what do you do with it? How do you actually manage it? How do you get those ideas that you have and actually test them? So that was a massive challenge. So that sort of brought me into So as I said to you, originally I was from an engineering background and whatever else. I was quite lucky that I'm not the normal sort of way that most traders that I know went into trading. So after 5 years of probably really heavy trading, like everyone else did, I started hiring developers, which I said to you. So the reason why I did that was because I wanted to expand. I thought to myself, right, how do I get all these ideas that I have, how do I test them? And how do I look at markets in different ways? So I had quite sophisticated systems. I paid a lot of money for my systems itself. And I went to these companies and I said to them, like, I'm interested in doing this, I'm interested in doing that. And most of them, even Reuters and whatever else, they're like, oh yeah, great, of course we can do that for you. It's going to cost you X, or, we've got APIs and you can do that. And then you're going to tie yourself into an expensive API. So that didn't really work for me. So luckily enough, because of the background I thought it was actually one of the Reuters fellas said to me, he said, you're probably better off developing something yourself, which I actually started to do. So I started working with a fella and started to develop that. So the biggest challenge that I found, which is probably not directly what you asked for, but for these retail traders, is probably the amount of data that you do have. When you do start to get all of this and you've got, you start to progress yourself, which is a bit further down the road, and you're going, right, you start getting really excited and you're like, oh, Sanjay's told me I'll need to go and do this, or whatever it is, I need to be doing that. Well, how do you know? I mean, this is the thing. I'm always like, how do you know? Don't ever just listen to someone. We've got stories about that, which, everyone's fallen into that trap of like, even really good traders, you kind of jump on the back of it. You think, oh yeah, they know what they're doing, or that's good. And then, you don't know. And then when you go and speak to them next, they got out and you're still stuck in it. And it's like, oh yeah, I forgot to tell you that. So I think that amount there, the retail trading space is very, very difficult for them to try and actually analyze that data to really, really clarify on what it is, how to get your edge and what to do. And that was my challenge. I'm going on my journey to try and
I still see this as a big problem, right? I think even though it was something that you experienced, I think this is something which is still very common in the trading space that traders are struggling with. Because from the perception that I have, when I talk to a lot of traders, I have actually a very similar approach to what you said, which is, if I'm going to coach a trader, and again, I only work from the psychology side of things, but a big part of what I have to address from a psychology standpoint is, do you have confidence in your edge? And so one of the first questions I ask people is, do you have an edge in the market? And if they say yes, which I'm hoping they would by this point, if they say yes, my question is, how do you know? And what I want to know is, they have data. They've proven, they've tested it over a certain period, and they can show me that over X period of time, this and this happens, and it generally tends to lead to this outcome, right? There's never any certainty, but you're always playing a game of probability. But I want to see that level of testing being done. And so for some traders, they just haven't done it. They make their decisions off gut feelings and instincts and rumors and whispers that they've seen online about what may happen. And then there are others which have an idea about a strategy, but they haven't fully tested it. And a lot of it generally comes down to what you've said. It's actually taking the time to go through those steps to test the strategy for themselves. And especially when you're talking about trying to find an edge over, whether it's 12 months of data, whether it's 5 years, 10 years, 20 years, it can be a very taxing job for a lot of retail traders. So I think there's definitely truth to what you've said there. I think a lot of traders are struggling with that.
How do they test them? I mean, this is it. I mean, it's a big problem themselves. I mean, you can test certain things, but it is a massive challenge. It is a big challenge. And it's interesting what you said about you asking whether they've got edge. I mean, again, without getting too in depth about these things, I mean, sometimes it's quite hard to know that as well. Even if you have tested something, it's sometimes you can fit your data so much to your ideas.
Yeah.
And that's a very dangerous thing to do as well.
Yeah.
So it's a bit of everything. Yeah, you definitely need to test. You need to be looked and understand what it is. And then what I generally would suggest is, and again, I probably wasn't the best case of this. I probably did trade things quite quite live, but I just trade it smaller. But it's kind of it is to start to do it on a demo account or whatever it is. Actually start to trade it and get that feel and get, get a feeling for it. But yeah, it's a massive thing we could talk about is edge. How do you know that? I mean, it's.
I think testing the strategy impartially, because I think what you said there is key. When you add the human element behind execution or analysis, it's very easy for your psychology to start looking for what you want to see and not necessarily what the data is telling you that may happen, right? And this is where you said, like, people start to try and fit their edge with the data that they're seeing or with, what they're seeing on the charts. And again, it doesn't necessarily bring in a true representation of what you're going to find in the future. So yeah, it's an interesting game. It's a very interesting
You've got
game.
lots of these optimizers, haven't you?
Yeah.
Which sound great.
Yeah.
I mean, we all fall for it, don't we? You put it over a long period of time, and then you change all your things, and it scans through, and it says, "Oh yeah," and you go, "Oh great, I found something." Well, then be careful.
Yeah. Okay, so before we start to wind things down a little bit, there's one other thing that I want to touch on, which is the psychological element. You obviously know a little bit about my side. I'm really big on psychology. Love talking about the mindset stuff. When it comes to your strategy and actually being able to pull the trigger when you're supposed to pull the trigger or walk away when you're supposed to walk away, how much of an influence do you think the psychology plays on an individual?
Yeah, I mean, it is your area, and it's probably, I don't know whether I've been quite lucky with that sort of thing or not, but it's something I've seen traders, and some traders say that are scared to hit that button.
Yeah.
And sometimes it's like, you're almost going, after X amount of days or whatever it is, it's like, look, you need to do something. Like they are looking at everything so much. So the psychology side of things, they're just nervous. And then you've got others that just can't stop clicking. Yeah. So I think I was quite very, very lucky in that respect. But if I try and think about it from, it's having I don't really know how to answer it directly. I think it's having that inside you, right? Just inside you. Listen, you're never going to know. I know I'm going to be wrong. Yeah. Yeah. It's the way it is. If you think about, before I went to uni, I did lots of sales and whatever else it is. And you think about it, and I used to, they go numbers game. So you go knocking on the doors or whatever it is that you're doing, and they're like, no. So yeah, no problem. Move on to the next one because I know I'm going to get to that. Now, as long as you think I am going to get there, yeah. So again, we're going back now down to the data and whatever else it is. I know, in general, I will be making. You look at your runs or whatever else it is. I haven't. There's been, I don't know, whatever. 15 losses in a row, right? So I know. Then generally you can manage it. I can manage it. So I think again it's the person inside. It's understanding yourself and whatever else it is. I mean, that's your area.
Yeah, no,
I'd send them to you. Don't give them to me.
The thing is, again, I'm reflecting on the conversation that we've had so far. I think a lot of what needs to be done, but maybe not consciously. And I say this because something that you mentioned, I think it was very early on into our conversation, is just knowing your appetite for risk, for example, right? And that's a big part of knowing yourself. But for me, that all falls under the psychology element. Right. Because the example that you gave there was, some people are afraid to hit the button and some people just can't stop hitting the button. And a big part of what changes people's approach to being able to do that can often be how much risk is on the table. You might find if people are not risking enough, they might be too trigger happy. And you might find if they're risking too much than they're actually comfortable with, they struggle to push the button. Yeah. And just by tweaking that, and again, this is not necessarily a reflection on your strategy. Your data can be there. You could have everything behind you to say that this has a good probability of working. But just because you haven't done that internal reflection and know yourself, your own risk appetite, The moment you tweak that, you can completely transform an approach to the markets. So it's an interesting one, but I like the fact that even if you don't know it consciously, I think you resonate with a lot of those ideas because you've obviously experienced them for yourself, right? You've seen it in either yourself or others.
Yeah, exactly. I've been around say lots of different traders we mentioned, and I think it's taking the bits from these different types of people that you see.
Yeah.
Yeah, and bringing them on yourself, and I think then you can feel, it's feeling good in yourself. I think is very important. It's very hard, like I said to you before, if you haven't got that sort of support around you and whatever else it is, and you've got everything else planned on your mind, and how am I going to pay these bills, or whatever it is, you want to try. Or again, I've had loads of these things as well. Is knowing I'm doing this now, so everything else is gone. Right? You just naturally, focus on what it is you're doing, and and I think believe in what you're doing, understand, like we said, your market, and just try and treat it like a business, as we said. Nice. So keep it in that respect.
Yeah, love it, man. I love it. I want to start to wind things down a little bit. I usually like to end the podcast off with a few questions that I just want to fire your way and get your thoughts on.
Let's try.
So first one, I would love to know, obviously you've got quite a lot of experience in this game. What advice would you give to your younger self? Is there anything that you would do differently? Is there anything you wish you would have known 10, 15 years ago that you think would have helped you in your journey?
I mean, I never look at regret anything when we say differently. There's opportunities that obviously we all kick ourselves. I mean, as a trader, we always say, "Oh, I should have done more then," or "I should have done less then," or whatever way it is. But I'm just trying to. What would I tell myself without obviously having that ball to say I should have done more at that particular time, and I would have, wouldn't need to worry about anything else or whatever else it is. But to be fair with you, as trading, again, I think it's quite addiction's probably not the best word, but if you are very passionate about something and whatever else, and again, I am not a gambler at all. I will not play a fruit machine. I will not do anything unless I feel, it's got. I'm not saying I don't have fun or anything else. I mean, when I go to Vegas, we play craps and we play all sorts of things, and but I know, okay, when I'm just, it's fun money. So what would I tell myself? Probably I would say would be, I mean, I spent a long time going through spreadsheets and whatever else. I would probably try and find tools that I could use, especially nowadays. I mean, there's a lot more out there. It's not like, there's a lot more tools out there. There's lots of great things. Again, we haven't started talking about AI or whatever else it is, but be very careful with certain things. Be very careful with predictional things. I'm not, going to try and find someone that's going to predict things for me or whatever else. But I'd probably try and fast track myself and actually get more into my into that and use these tools or whatever else it is to help my journey, help me to do things quicker. To understand those markets, really.
Makes a lot of sense. I think we're very fortunate. I remember, I mean, I obviously I haven't been in the game for as long as you. I started like 2012, 2013. But I remember even the charting platforms that were available back then were worldly apart from what is available now. They didn't really have like alert functionality or anything like that. And like you said, the tools that are available, the AI options that can, help you speed up the process somewhat in certain areas, especially when it comes to data and crunching and things like that, can really, really change the game. Because obviously time is an important element.
It is, and especially if you're you're a resale trader and you're working and you've got everything else going on, and obviously you've got other stuff. You've only got a small amount of time, so trying to use that for the best thing. And again, you could get really so overwhelmed with, I've only got whatever time period it is, and you focus on something, and it may not be the best thing or whatever else it is. So it's a big challenge. So try to. I would say get yourself around. I don't know if you're going to come up with this question next, but definitely get yourself around. It's easy to say the right people, and that's always a thing to say, but it's always doesn't matter what you're doing, but you want to be around the right people where you can obviously learn and be encouraged and learn from each other. And obviously it's great to have mentors, as they say. I'm not saying that you have to sign yourself up to someone and pay someone a mentor, but just knowing someone or being around them spaces is the right thing to do, and picking up different things from different people.
So using people and platforms and technology to basically be more efficient with your time. Yeah. Fair. I like that. Okay, one final question for you. This is one that I've started throwing out to every guest so far. It's probably my favorite question because it touches a little bit on the psychological element. It's a hypothetical scenario. I want you to envision for a second that you're running your own hedge fund, prop firm, whatever it may be, and you've been tasked with hiring traders that are going to sit and trade on your floor. The only thing you don't know and you don't have visibility to is you can't see the trader's track record. You have no idea which one of them are profitable. You have no idea if they're BSing you through the interview, whatever it may be. Your job is you have to determine which ones are likely to be profitable. What personality traits are you looking for in a person that may indicate they're going to be a good trader?
Interesting. So, I said to you, I started touching on it earlier. I've had lots of people that have asked me to teach them to trade and whatever else, and we didn't get into that whole area. But what I also know, I've worked a lot with younger people at schools and whatever else it is, and where my kids go and that sort of thing, and helped out in certain ways or whatever it is. And I find the children, as it is, the ones that are a little bit more, how do I put this in a particular way, that are not the norm in certain respects, where they are maybe a bit more, I don't know if it's the right word, a bit more, maybe they're not very academic.
Okay.
Yeah, maybe they're not very academic, or maybe they are. It doesn't really matter. I'm not saying that. But they're certainly not the norm when they might be a bit more naughty, or they find it harder to, the teachers might find it harder to try and actually control them and that sort of thing, and whatever else. Those type of people, if you've got some determination and whatever else it is, that's what I think is really, really important. I learned a lot from my parents from that, certainly being entrepreneurial. So business, I think, is very, very good, because we need to treat it like a business, which means that you are a risk taker. Yeah, so you want to be able to take risk, but you want to be able to control that risk, which I think is very important. So I'd probably start to gauge someone from that sort of respect. Being analytical, doesn't mean that, again, that they have to be some mathematician or whatever else it is, but we're just talking just general logical things here. You can feel that they could get that belief in themselves, because sometimes, where you get people that are, my background wasn't great, and I've done very well and been very happy with what I was doing, but people that have that, so anyone can get into trading, can't they? And that's sometimes always the problem as well.
Barrier to entry these days is very low.
It's like, and that's what people think, and that's why they think, I can go and make money quickly, or I can do this and whatever else. Well, it is a profession. You need to look at it like that and understand, like we said, about a business and that sort of thing. So going back to your question there, I'll be looking for them type of people there that definitely are. Could be passionate about what it is. They might not even know what trading is at the time, but let's say they do, right? Certainly someone that's determined, that wants to be able to put in the hours, and whatever else it is that's like that. Entrepreneurial, definitely, that understands that you don't want to find someone, again, that could be a good trader. I mean, I would personally, that could be a good trader, but you want someone that wants to be a great trader. So they want to be able to, again, push it when they can. So you want them to have a bit of a risk appetite. Being analytical, being able to sit down, being able to process, probably able to think about things themselves as well. So they can sit down and spend time on their own, understanding things and whatever else it is, looking into it. Confidence. So you want to have some, confidence to be able, like we said, about pressing that button and whatever else, knowing that, happy to jump in and whatever else. When they're wrong, they're wrong. being able to take that on. I think someone like that, a personality like that as it is, it doesn't mean that they have to be like this personality that, again, you can kind of dig into certain people. They could be quite a quiet person or whatever else. It doesn't mean that they've got to be this sort of extravagant sort of person that feels, they're really, really confident like that. So, a mixture of all of them, and you can kind of get an understanding. Definitely wanting that thing, being passionate about, I think is very important, which I've said that many times now, I think.
Yeah, no, I like that. It's, you mentioned this just now, and I think you touched on this very early on to the conversation, and you mentioned how not being normal or not doing things textbook. I think it's an interesting way to look at things, because actually, if you look at the statistics of being a profitable trader, normal doesn't make money, right? If you're doing what most other people are doing,
100%.
or you're doing what people are saying in the textbooks, you're probably doing something wrong, right? It's a minority of people that actually make money in the markets, and clearly they're doing something different to most other people. So actually, I would say not being normal, being a little bit different is probably going to work to your advantage somewhat.
It always gets to me. I know when they have this sentiment things on platforms, sending most people along or most people are short. I mean, I haven't tried it, so don't go and do that. I'll probably go the opposite. I mean, that most people don't make money or whatever else. But yeah, no, definitely. I think it's really important, say, to be individual. Definitely be individual. Definitely have your own mind and being able to process many, many different types of people's ideas and whatever else, but definitely be your own person.
I like it. I think that's a good message to wind things down on. Before we wrap up, if people have enjoyed listening, hearing you speak today, what's the best place for them to come and find you, follow your journey, things that you're interested in now?
They can find me on LinkedIn.
Okay.
Find me on LinkedIn for sure. We are starting a company, which I think will be, there'll be a link probably, which we can say, which is called Trader Lab, which is certainly should help some of these young inspiring traders. But yeah, connect to me on LinkedIn or, well, I'm not very good at emails anyway, but definitely LinkedIn or whatever way. Yeah.
Awesome. Appreciate it. Lee, thank you so much for joining us.
Thank you. Thanks for having me, Sanjay.
Appreciate it. Guys and girls, I hope you enjoyed that episode filled with a ton of wisdom, and really appreciate the time that Lee has shared with us today. As always, if you've enjoyed this episode, make sure to give it a thumbs up. Make sure you subscribe to the channel, and I look forward to seeing you in the next one. Take care.